The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends. As always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, we had Friday, and it made me think of a song, which will be a new theme song if we go down any farther. And that is the song by, it's Better Days by the Goo Goo Dolls, which will be our new theme song for this pullback. I've seen better days. I've seen better days. And the bottom dropped out. And, of course, got a lot of that going on out here today. So we will continue to keep an eye on it and get everything else set up also. I guess, I don't know why this does it. Okay. There we go. Wanted to make sure everything was set up. So we've got a market out here that opened a little lower. It's been kind of playing around, kind of being a little bit of a tease out here, saying, well, maybe we'll test this day low at 24.1997. Maybe we won't. We're 2 points higher than that. But again, this is not a day where we are down on lighter volume. The NYSE consolidated tape already has 2 billion shares. As we spoke last week, how many days did we come in at 1.5, 1.6? At a good day was 1.8. That we're already at 2 billion shares tells us one thing. We have real sellers out here. And that's kind of it. Yes, I've got the beautiful balloon song too. It's just, it just doesn't apply anymore. I've got some other theme songs though that we'll be able to play today, and we will get to soon enough. But again, that's kind of it. Now, are you going to have in any kind of pullback or bear market, you're going to have fairly big retracements. And that's kind of it. If you didn't have any big retracements in a pullback or in a bear market, then everybody would just give up and the bear market would be over in a couple of days. A bear market requires some people that think that we've already hit bottom. And we haven't moved that far off the top to actually say that. But, we're off 9 points in the S&P cash. There hasn't been a decent rally attempt throughout the day. We've gone up. It's been on light volume. As soon as we hit about 24.25 on the S&P cash, we find a kind of a lot of sellers more than willing to give up their shares today. So we'll keep an eye on that, see if there's anything else going on. But for the most part, this is a lot of hurry up and wait to see what the big men of the street do come the close of the day. Because just like Friday, we were probably going to have light volume, but the last 20 minutes, monster volume coming in. And again, volume off the top. So we'll take and examine that. We'll look at a lot of charts today. We'll have some fun at the expense of Apple and a handful of other things. So let's get started.
And it's all just a little bit of history repeating.
And I noticed that Seeking Alpha had a big article on that song from the Propeller Heads that I play. But I didn't like the article that much, but kind of interesting to see somebody else. I wonder if it's one of my faithful listeners writing about the Propeller Heads. Not too many people know about that song. On this day in 1987, in one of the most famous speeches of all time, including Cold War speeches, President Ronald Reagan challenges Soviet leader Mikhail Gorbachev to tear down the wall, and a symbol of repressive communist era in a divided Germany. Happens a few years later. I was there to watch them beat the wall down, which was very interesting. A very neat day, especially it just kind of let me know how many people in Washington during that speech were telling everybody that Reagan was going to cause a nuclear war. There was just so much disinformation, and I don't hear any of these people apologizing whatsoever. And I always thought it was one of the best speeches of all time. So I'm going to display it here. Then we'll get on to the rest of the story.
And now the Soviets themselves may, in a limited way, be coming to understand the importance of freedom. We hear much from Moscow about a new policy of reform and openness. Some political prisoners have been released. Certain foreign news broadcasts are no longer being jammed. Some economic enterprises have been permitted to operate with greater freedom from state control. Are these the beginnings of profound changes in the Soviet state, or are they token gestures intended to raise false hopes in the West or to strengthen the Soviet system without changing it? We welcome change and openness, for we believe that freedom and security go together, that the advance of human liberty can only strengthen the cause of world peace. There is one sign the Soviets can make that would be unmistakable, that would advance dramatically the cause of freedom and peace. General Secretary Gorbachev, if you seek peace, if you seek prosperity for the Soviet Union and Eastern Europe, if you seek liberalization, come here to this gate. Mr. Gorbachev, open this gate. Mr. Gorbachev, tear down this wall.
Yep, I don't think you can give a better speech than that for a better purpose, and one of the highlights in politics, at least in my life. What else did we have going on today, Jeff Immelt? I've always called him Jeff Patty Melt. General Electric Company chief is being replaced by John Flannery. He's the head of the GE Healthcare division. Immelt has probably been on the fence of being fired for some 5 or 6 years. And most people, well, they just won't actually tell you the truth about why General Electric hasn't done very well. But I will tell you when we come back after this, and then we'll get right into charts. Tear down that wall, Mr. Gorbachev. Tear it down.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, Jeff Immelt decided to cozy up and get in bed with politicians on one side of the aisle. Within 2 years of his decision to do that, those politicians lost power, and certainly lost power in the House, where all original legislation for spending has to come because of the Constitution. His fervent desire to get in bed with one side and vilify the other side left General Electric a pariah in Washington, D.C. for these last 6 or so years. Without a change in that, many people behind the curtain figured out that they could no longer have him as the poster boy for General Electric. The thought was, and probably for a decent idea was, that, of course, that would work out. And it did not. Elections have consequences. And his, I think he got just a little bit before the cart before the horse. But I think this is a warning for anyone thinking that politics is a great business model to go into if you're a huge corporation. People come and people go. And fairly on, he tied his wagon to something that went the other way. And the only thing I'm worried about is, or wondering about, is why he wasn't canned by maybe 4 years ago. But just about everybody ganged up on him in the end to force him out. Even then, they had to give him a golden parachute and a lot of cover for him being forced out. But even Goldman Sachs and several others went against him this week, and there was nothing left for him to do. But again, I'm very nervous always. Doesn't matter which party is in there, because you can always lose power fairly quickly. If your business model is getting close to government, that can change and change in a hurry. Jeff Immelt found it that way also. Anyway, that's about it for what's going on in that. Let's go ahead and start looking at some charts. Going to see if anything is actually moving and giving us a signal here today. You can give me a call at 877-927-6648 and see if there's anything else going on out here. Wanted to see if, right off the bat, if any of these stocks had really bottomed out here. Bed Bath & Below has been on a sell forever, it seems like. We got the first real, well, you got kind of a close above the 3x3 on the first. You got the second one out here on Friday, and you got a little bit continuation. These were the first ones to really get hit. They are the stocks that are the shortest. And I don't know if there's anything in Bed Bath & Below, but these some of these retail stocks, including some of the mall retailers, were bouncing today. I thought that was very interesting. But my guess is that this is, for the most part, a dead cat bounce. We get back into fall again. I don't see anything changing that tells everybody that they're going back to the malls and not buying stuff from Amazon. But at least in the short term, some heavy short covering and some bounces in some of these. I think it was, what is it, SPG? Is it Simon Property Group? Is that the name of the one? SPG. See if I can remember it. Is that it? Yeah, it is it. Same kind of thing in it. So a handful of these retailers that have just been clobbered and beaten and bloodied and bludgeoned and stabbed and shot. Just about everything you can do to them. Are up today. It's not tremendous, but any respite in a storm, these things have been looking kind of interesting. IRBT, some of these stocks that have just gone to the moon, we've talked about this 3x3 for a while. We're finally, Apple did it kind of last week, went back up there and failed. I think you could have similar patterns in some of these others, but we have had now decent closes below the 3x3 in that pattern. And a lot of these, you just want to look for the next big high volume down day and or gap. And if you find them together, you can look at a likely target. If you're thinking long, then think about some good risk reward, where you would want to buy these and where they're going if you're short. In iRobot, today, volume, okay. But 70 to 75 bucks, there's a great gap that goes back to, what is this, the 26th of April? Did that on 3.7 million shares. So you're probably going to have fairly decent support around that $75, $70 level in iRobot. A lot of these things have kind of started to crack. This is a handful of these stocks, some of them on the bottom too. Again, some of the worst energy stocks out here have closed higher. Tractor Supply, not one of those, but again, a retailer that at least has come off the bottom a little bit. Volume on Friday was up a bit on 3.5 million shares. Today you spike with 2.5. You're probably going to need to double bottom on some of these, but my guess is you could start looking at some of these, like Tractor Supply in the retail space, but I want a test of $52.85. If you were short these, it doesn't look, unless you get a lot of volume coming back down to the $53 level, I think you've got a long level of consolidation if you think they're going lower. And if you're short, I don't understand hanging on for the last few bucks. Anywhere down 53 bucks, I would cover my short on this one and wait for either the long consolidation with a bounce higher to grab it, or a handful of other things. You can give me a call at 877-927-6648. Other stocks that have cracked below the 3x3 now is Regeneron Pharmaceuticals, REGN. This one has been on the upside of this since the 28th of April. You got your close, you got your close on Friday. A little bit of continuation down here. And again, what you want these to do is stay on the south side of the 3x3, as a lot of this stuff does pull back. And, you know, we've got a handful of these things. Someone wanted me to look at Amazon and see if it did that. And not really. You just had your real big break on it. Now, normally what will happen on Amazon is you'll get back up one more time above that 3x3. The next close that you get after it goes above it is normally where you want to pull the trigger on it. Now, is that going to be, you know, something like 970 or something in a handful of days from now? It certainly could. But if you want better odds, close above the 3x3 or 9-day moving average. Let's take a look at that one. This is a traditional moving average. Okay. So this one, you're still above a long, oh, that's a 50-day. Why did I go to the 50-day? Let's go back to the 9. Let's go back to 0. Okay, so you're below that first time, really. You need to go back above it, and then the next close below it is your trigger for pulling the ripcord on the short, if you're thinking that way. We'll be back after the short timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I don't know. I'm getting confusing messages from my engineer. I have no idea. Number 9. I don't know what that's supposed to mean. Anyway, we have a caller. Is that what that's supposed to mean? Have you had a stroke? Is that what that's supposed to mean? You never know. Okay. Better days, better days. And the bottom dropped out. Okay. And, oh, we were looking at Amazon. We'll look at a handful of these others also. Quick look at Facebook. You know, you had, this one wasn't as good of a pattern, and you could make a case that this one already had its dropout. You just want these things, if they've already broken this pattern, to get back to the resistance level. And if it shows resistance light volume, pull the trigger yet again if you haven't, if you're not already. If you're already, then you want to make sure that these things don't go above these levels. Let me get back to my DMA here. Okay. You just want these things to stay under. But if they break above, there's no volume, and they close back below, you can go short right again on it. I think, you know, you're probably talking about 140 as low in Facebook. I just don't see the reason of going after a $145 stock for $4. But whatever. We'll take a look at Apple. And, of course, I think I still have it, don't I? Yeah, I do, because someone brought it up again today, so we'll have to bring my theme song back for Apple.
I'm all out of love. I'm so lost without you. I know you were right, believing for so long. I'm all out of love. What am I without?
Yes, Wall Street is out of love with Apple. 2 downgrades in 1 week. They're all out of love for it, down to 142.51 today. As we said on this one had come back, closed below the 9-day, but this is kind of the pattern that you look for. I think Apple, being the biggest tech stock on the street, maybe had a few more people willing to believe until the bottom dropped out, as the aforementioned song said. But you had everything. You had huge volume of almost 65 million shares on Friday. You got 57 million shares already, and yet another downgrade. Is this thing going to go to zero? No. I mean, is there still great business underneath it? Yes. But almost all the stocks we've been looking at over the last year have gone back at some time to their double gaps. Now, Apple has that double gap at 125. It also has a triple gap back at 98. And if I did go through, I think we talked about this a little bit on Friday, I did go through the differences between the Qualcomm chip and the Broadcom chip that Apple was going to use. I guess they're still going to use it, that everybody's squawking about. But it does look like there is why the chip will connect at high speeds. The throughput is not what the Qualcomm chip is. And I'm not exactly sure if the Qualcomm chip's a 64-bit chip and the Intel chip's just a 32-bit chip. But there's something in there that makes the throughput of the Intel chip much bandwidth limited, i.e., it may connect, it might act normal, but it's not going to be as fast. And, of course, a lot of discussion, especially from T-Mobile, about them going to faster data speeds in the near future. And if they are not supporting that LTE mode up to 1 gigabit a second across cell lines, that could be a big deal. It may be a big deal for T-Mobile, especially because if they're pushing this and none of the iPhones can do it, that may be one part of the problem. The other part would be, of course, Samsung pushing them their product, which will do 1 gigabit per second. In fact, they were showing that off at the, I think it was the 1st of May in the big telecom convention in, I want to say Barcelona, but I think it was somewhere else in Spain around the 1st of May. Each year they have that giant telecommunications conference. So there is something to it. Apparently, a lot of people have known about it for a little while, and maybe Just a lot of people were willing to get the stock up there as high as they could, try to kick out as much and distribute as much stock, and maybe even get short before they drop the hammer on Apple out here today. So down second day with decent volume. If you project today's volume, it will be even bigger than Friday's volume. So you've got a lot. Now, support, like I said, comes in at about 140, maybe 141. So we're not that far away from it. Could today be at least a short term on that? It could. But, I mean, there's been a lot of rumors circulating that Apple won't get this phone out for third quarter, which has weighed on the stock a little bit. But I have a feeling, I wrote in my newsletter that many people on Wall Street subscribe to the cockroach theory. That is, you see one thing, you see one cockroach, you figure there's 100 more hiding. And if a lot of people are thinking that maybe there's one problem here, that maybe there's more. And I think more people are starting to look at the current CEO much to the way I looked at the Microsoft CEO for the last 15 years before they got the new one. And that is that Ballmer, just as a CFO, is never going to be the kind of risk taker that you need to grow a big business larger. His job, as he sees it, is to make sure that nothing goes wrong. That generally lets you slide for a while, but in technology, if you stop swimming for a second, you sink. And I think Apple has got a little bit of that, along with the half-hearted effort last week to show their HomePod, which really didn't do anything. It just looked good when they showed it last week. I think a lot of people are going, well, these guys are not only late, but they may even be late for Christmas. And that's the one thing you don't want to do. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And no, I don't think the HomePod is any savior. I think we talked about this at almost 360 or 70 bucks, double what the Amazon is. Do people really want to buy this to listen to music on? It may sound good, but I think they're going after the same people that buy Bose equipment, that they really don't know much about music and buy it anyway, thinking that it will sound good. And it does. I mean, it sounds good, but generally about twice as much as if you bought just regular decent components somewhere else. So down, heavy volume. Let's take a look at Microsoft when we come back. MSFT. I don't know if they really talk up the deal about 1 gigabit wireless connection with T-Mobile. How's that going to play? I think they do have a real.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
He chose poorly.
Yes, he did. And what else do we have going on? Oh, we were going to talk about Microsoft here. Came off with a lot of volume on a Friday, let's call it 49 million shares. Today we're down with 37 million shares. I've created a small firestorm in a division of Microsoft, the research division. I've written about it in the Tech Insider, but I wrote kind of a nasty blog post on one of their blogs about them missing a giant opportunity, and it started to snowball. I don't think anybody's going to point me back to the originator, but I'm going to look at that post as the post that changed everything, because I had about 5 comments after that, and then about 20 comments after that, and then about 400 people after that. Microsoft in machine learning, artificial intelligence, has the ability to move the needle, especially with its own customers. But what they're doing is basically relying on software written by many others, including Amazon, for the future. And I basically wrote that if a programming language known as Python is the future, then the future is not Microsoft. There's a lot of reasons for it. But, it's kind of like English is the language of the world now. Anywhere you go, someone's going to speak English, even in China. You're not going to get that here. You're not going to find a lot of people speaking Chinese in the United States. There is a reason why, and that is that we are the dominant culture. If you let that dominant culture in programming become something like Python, which is just another language, compared to the ones that you've been spending huge amounts of money to develop for maybe 30 years now, maybe 37 years, it becomes problematic for Microsoft's long-term viability. I don't think this has anything to do with it. I do think it's very interesting that Microsoft has not done anything horribly wrong for about 3 years. This may be the first thing, and that is they missed smartphones, and if they don't get their act together very quickly, I think that they have the ability to quickly miss machine learning too. They've got some stuff, but again, it's kind of like you've got an 8-track and I've got a cassette, and everybody's kind of decided that the cassettes are what's in. Now, you could come out with a DVD and CD player, which would swamp both of them, right? But instead, you decide to do nothing. And right now, unless Microsoft has something hugely hidden in the wings, it's kind of that biblical parable of hiding your lamp underneath a bucket. Although I think it was something. Was it? I think I would keep calling it a bucket, a bushel. I think that was a bushel basket, because they had he had it is light under a bushel basket. I kind of think that unless Microsoft's got something hidden, they've got some huge vulnerability, especially in the web services department, where they would be just, yes, I do it too, but this product came from Google, or I did it too, and this product came from Amazon. They have their own product, but they're kind of giving it the half-hearted effort, which always kind of makes me think they're really not committed to it. In my blog posting saying that I was somewhat upset, I related this to Apple trying to do Apple Maps with 200 people when Google had 6,000 people on their map service doing everything. And then somehow the CEO that we have now for Apple is magically surprised that his product isn't as good as Google's. Kind of the same thing. Microsoft needs to be successful in this AI in the future. It better get its soldiers together and, like Patton, turn in the middle of a winter battle, go 100 miles north to Bastogne, and kick some rear end. Well, I don't see any hint at all of Microsoft doing that yet. Doesn't mean they won't do it. But for the first time, there's kind of a little bit of light out there where they could do wrong, where they've been pretty much bulletproof for a few years. Don't know if this had anything to do with their falling. In fact, I'm pretty sure it didn't. This is kind of a long-term problem for Microsoft. Okay, what else do we have here? Microsoft, let's take a quick look at the Netflix. Ain't nobody gonna bulletproof me. But Microsoft's got this division of their company that they call Microsoft Research. And it's just, they come up with some really great stuff, and then they do nothing with it. It reminds me so much of Xerox, basically giving everything up to Apple for the windowing system and the mouse and all the other stuff. Same kind of thing. They've got some great products, and I've played with all of them, so it's not like something I don't and haven't tried. So they've got some good things. They just don't know what to do or won't, and are not getting the attention they need. Now, Netflix had a bone-crushing Friday, down with 10.3 million shares. Today, just 11 million shares. So we're actually higher volume today. That means that, we're probably going to get, 14 million shares by the end of the day. You do have support back on the 25th of April when Netflix did gap up. So you're almost there. You got into that candle today. You're going to get into it with probably lighter volume. But my guess is you're going to bounce a few times, and then you're going to come back. If you really believe in Amazon, this, if you come down this hard, I never want to buy a stock that comes down this hard. You want it to go and consolidate for maybe a few weeks about this 47.50 level around there. You want it to continue to come down each time, a little lighter volume, maybe bounce a couple of 2 or 3 times, and then come back down into this thing with maybe 5-7 million shares back around that 147, 146 level. To me, that would be the best risk reward if you thought long. I'm not very bullish at this time. If you got that, maybe I would say that was interesting. And you got a target out here at 166 for the high. But I'm not feeling real froggy on that. Someone wants me to look at IBM from the email. Okay. Again, we've talked about this one for a while. You've had two major gap downs. This one does look like it would have a third gap down. This looks like about as good as it's going to get on IBM if you're long this thing. Gap down on 12.5 million shares on the 5th of May. We're back up into it with 4.3 million shares. We'll talk more about this when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Wanted to get to IBM, then we'll talk about the IWM. Anyway, you've got two nice gaps, and again, we've been waiting for a while for this to happen. My guess is that this will now have one more time to gap down, and if you figure that the gap down's kind of about like this last one from the 5th of May, what did it go from? Let's see, what was the close? 157. And opened what at the next day? Opened 152, so about $5 gap down. Figure that you want that as a clue to where this thing may bottom out. But my guess is you're going to get one more gap down in IBM, and it's going to be about $5 or larger. before you even have a chance of some kind of low. I think that could easily take you down to this 143.49 low from October 18th. There you might find some level of support. Okay, what else do we have? Oh, we were talking about IWM, right? Go back to that. Okay, you had higher volume. This thing spiked on Friday with 56 million shares, did not hold the high. And this is more of a thing that I think you're going to have to be around stock trading for more than 5 years or 10 years to really get. And that is probably from the mid-90s till, well, it just hasn't happened a long time. You've always seen that the small caps and mid caps tend to run after the generals. The big caps can't run anymore, and they'll spike them right at the end to see whether or not there's anything left in that kind of business. Maybe those aren't running. Maybe they'll go ahead and push the mid caps or the small caps. So just before generally big market retracements happen, you do see the small caps tend to spike. And you got that spike on Friday. To me, that's more of a confirmation of a bigger top in the market than a smaller pullback. If I would have seen a light volume test on that, then I would have thought, okay, maybe we're just going to have a normal pullback. But when you spike the small caps at the very end of a big long run, it's normally the end of gamblers trying to find anything that will go higher. Now, Tom kind of touched on it Friday at its 3 o'clock hour. I think I typed something in the den, and it probably made him think of it too. And that is that we've had a lot of very small movements in the market. And that tends to make a lot of people huge gamblers. The reason why, especially if you're a hedge fund, you've made half of what the S&P has made in the last year. You've got to justify your existence and your massive fee schedule. So what you will do is you'll start leveraging up and leveraging up and leveraging up. What we saw, I think, starting on Thursday and Friday, was a lot of these guys going to the hilt only to find out that when they got their hands in the cookie jar, it was caught. Of course, any hedge fund, anybody that's much more like a big trader with hundreds of millions of dollars can't get in and out of the stock market fairly quickly. When things turn against them and you're on margin, you see the kind of moves that we had on Friday, especially in the tech sector, because these guys do have to get out. There's no option for them. They have to sell. Watch out for leverage. Watch out, again, when everybody gets depressed and thinks that we've got a low coming, that we've got much more to go. We haven't had that yet. No fear in the market. We'll see you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.